All right. Welcome to the Fiscally Awesome podcast. I'm your host, Matt Gardner, co-founder and CEO of Hiline. Today on the pod, we have Alex Boyd. Alex is a serial entrepreneur. He's an ex-agency founder. He's a SaaS founder. Does a bunch of investing on the side. He just went through an exit with his most recent company, RevenueZen. I think Alex has got a ton of cool perspective on marketing agencies in general, and we're excited to get into it. Alex, what's up, man? It's good to see you.
It's great to be here. It's good to see your face.
Yes. Great. Yeah. You too, man. Hair looks great. Setup looks great. Thanks for agreeing to come on and join the pod with us.
Yeah.
We got a long history together. We can talk a little about that, man. But maybe for our audience, like, who's Alex Boyd? How'd you get started? Where you from? Where have you been in your career?
I guess at this point, I'm not a LinkedIn guy or go-to-market guy. I've just become a hippie capitalist. We started with the capitalist part, and yeah, definitely.
You'll have to define what a hippie capitalist is after your intro.
Well,
or as part of it.
Well, yeah, like we're talking about, I grew up in the San Francisco Bay Area, and just there's this kind of ambition-forward track you get funneled into. Nice high school, find the right college. College gets recruited heavily from Goldman Sachs. So it was actually like the first sort of temptation was like the banking track. And then what led me away from that was everybody who showed up from Goldman on the recruiting day at Colgate, where I went to school, just looked like they hated their jobs and they just seemed really miserable. And it's like, okay, I don't want to do that. Come back, had this shitty internship at a like a D-list incubator. And that just seems like aimless. I don't know what I'm doing. And it just gives me this weird first taste of Silicon Valley. End up back in brokerage sales. And 2.5 years in, I'm just like sick of wearing a suit and tie, but I've realized that I'm selling better than most other people by relying on not necessarily like a methodology of selling, but on just knowing my stuff better. I eventually put in my notice and get recruited by an accounting services company. Think this is way more my speed, at least. And it's the opposite direction. Come in and be like, whoa, we need to kind of clean this up a little bit, just in terms of literally the office was not clean. Just like
not like hygiene, not clean.
Yeah, like I went from suit and tie glass door office to like literally on lunch tables. So I recruited another friend of mine who was from that last job, and we set about saying, okay, we're going to take over the place and do this thing. So we're still by this time on kind of a weird finance centric track with a strong sales bend.
Mm-hmm.
And then we get the kind of opportunity to move to Portland. And I think, okay, this feels right. So Portland is a great move. Start growing a sales office in Portland, which is where you want to build a team of accountants and salespeople rather than San Francisco. And
love Portland, by the way. It's one of my top 3 favorite cities.
Yeah, I'd say it's in my top 3 too. But
do you have any pictures of you in a suit and tie? Because I can't picture it. And if you do have any, you should text them to me.
Oh, yeah.
Just for reference.
Definitely. I do have some. I have tons of ties, tons of suits still. I have like the watches, the gear, all the stupid shit from that day. I feel great, and I just don't want to wear it to work. Yeah, I've been in Portland about 10 years now. Another 1.5 years into now being a head of growth at Indenaro, I am thinking, okay, I'm reaching a ceiling of my ability to build this in my own vision. And sparing the long details about the false start that I had with a different would have been partner before starting RevenueZen. Long story short, it was a 6-figure mess that I could not afford, which is precisely the thing that spurred me into needing to grow a business fast, because I just needed to pay off this gigantic settlement from, I signed the non-compete and now I needed out of it. And the only way out of it was seemingly this big check to write that I would write over the course of 2 years and up as a % of sales. So here I am, finance, interest, sales skills, doing sales consulting work and building an agency just to pay this person off. And that changed my personality. My personality went from like integrating financial interest, this sales skill, to needing to go from an integrator operator to a starter, like a person who goes out, hunts, gets, markets, promotes, just out of necessity. And I'm glad I had that. For those who have not needed to be in that spot, it's a great crucible to be in. And I'm sure if you're an accounting firm listening to this, or a marketing agency owner listening to this, you felt that at first when you started your firm. You just needed to go out and hunt. I bet all your peers
just do everything.
Yeah,
you got to learn how to do everything.
Yeah, everything.
And RevenueZen was obviously like a success story for you, right? We worked with RevenueZen, Hiline did, for about 18 months, and Alex actually was a revenue advisor for Hiline for a few years when we were actually trying to first figure out how we were going to scale. We had great experience, great company, but you guys ultimately ended up with a successful exit, right? So talk a little bit about how long was RevenueZen around and what was the transaction and the event that you guys just went through?
Yeah. About a year ago, we were around for just under 7 years in that form before we were acquired. It was about year 5 that 4 to 5, I went through the transition of this is my kind of forever thing to thinking,
Yeah.
okay, maybe it would be good to prepare for options. I saw the writing on that wall and then I did not execute that transition perfectly at all. I made a bunch of mistakes actually.
In the transition to being acquired, so transitioning from being the owner to now being probably more operator of an owned entity by somebody else. Is that what you mean?
That was easy. That was fine. The transition from going from thinking about my business as like a sprawling hub holding company for all things B2B growth to a focused business that was ideally highly profitable, that was very sellable. And I did not, once you make those calls, just even things as simple as putting a bunch of private stock on your books makes it harder and messier to sell. More partners than you necessarily need, having more leadership than you necessarily need, which is a call that says, let's build this 5 times bigger than it currently is. It doesn't work very well if you want to build it 50% bigger than it is and then sell. It just dampens your net income too much. Make the right
So
calls that prepped us for a good sale, I would say. So it worked in part because we had great story, good brand awareness, clean financials, if not stellar profits. But it was at least very understandable what was going on. So there was no like confusion for our acquirer.
Yep.
And my financial knowledge also translated into me being able to speak to structuring a deal in a way that matched our story. And so the deal was highly structured and like minimal cash up front. And in that sense, we still get a lot of the deal value that we wanted. It's just highly structured, which means you don't get it in a wire transfer on day one. Performing pretty much on par with the budget we said we would hit for his revenue, profit, and net.
Yeah. Well, that's been so you built when you were thinking about, do I want to build a big company or do I want to maybe sell the company? So you made the investments to build a big company and surrounded yourself with a leadership team and partners to share in the responsibility. And then, so you're saying that was made it a little bit harder to sell just because you had a lot of bulk.
Exactly. We were super top heavy, light in the
Yeah.
middle, larger on the, and thicker on the bottom too. We basically just, I had a fixation with hiring early on. Not necessarily to keep a lean team was not in my interest set. I was like proud of hiring for the sake of it, which is a terrible idea, but that's an affliction a lot of people have, I think, is look how big my team is.
Yeah.
And that just screwed us over.
Part of it is, I'm sure you're acquirer. Like when you have the team, though, it's easy to see how the team can be scaled
Yes.
because they bought a lean team. Then they're doing the mental math of they got to build a team out around them, and that actually probably takes longer to get everybody up to speed, get the chemistry, make sure you got the right people. So I'm sure it probably has actually helped you
It
guys,
did.
especially if it's like a gain, like delayed gratification. You guys are building towards something later. It sounds like it actually probably will end up working out pretty well.
I think so. We just overshot and spent a very painful year during a rising interest rate market. That was the year we had to
Yeah.
transition from leadership team is too big. Basically, it was like, which partner is speaking up that to change careers? And then one did, and said, I don't want to do this anymore. And I was like, great. That actually makes a lot of sense. We had the wrong leader in place for a while. I think this was probably, it was a good amount before you worked with us, but there was like a year where the wrong leader was in place. And our mentality was, the partners need to be not really as operational so that we can be acquirable. And that was, again, just the wrong mentality. That would have depended on really leaning in, having our leader be accountable and so forth. And it basically was the case that we overshot it. And there was like 2 partners twiddling their thumbs and making a salary, yet helicopter parenting the leader. None of that worked out. We had to unwind it painfully at the wrong time. And then we had to basically sell for, a good amount, like an amount that helps a ton with launching future things and helping our wealth grow, yet still half of what we had originally thought we could get at our peak. So it was like mixed feelings, right? It was good and bad. I'm very accepting of the whole thing. And it's great outcome for our acquirer. They get a phenomenal business with a, great IRR because it was structured so well.
So we have a lot of marketing agencies that we work with, and I think our model works really well for agencies in general. I think what you just described in your story. So if you've been an agency for probably let's say you've been around 7 years plus, everybody went through COVID. And I think that was like a
Yeah.
really choppy time for anywhere where there's perceived discretionary spend or budget in companies because everybody pulled back. Nobody knew what to expect. So you guys had to endure that a little bit too, right? Like I have to imagine it impacted you guys just like everybody else. And that probably changed your plans too and how you thought about the business and what you guys were going to do.
Yeah. Fortunately, we had a remote team from the start. So culturally, it was
Yep.
not the worst thing. And there wasn't much of an adjustment from that perspective. We definitely got hit. Like the first week of lockdown, we got hit, 30% of our business went away. And that was really
Yep.
scary. We had a really good April. So like, March ends. By the end of April, I'm thinking, oh my God, this could actually be okay. But it was actually the late part of 2022 when the inflation from COVID started to really bite that our venture-backed customer base started to really pull back. So while late 2021 was kind of a boom time, we started to lose our shirt. Jan 2023 was just a bloodbath. And so 2023, we just
Yeah.
spent kind of building the foundations again, limping onward. But we started that year half the run rate of where we were a year prior. So yeah, it was more the after effects of COVID than it was the actual itself.
So for like operators out there who own agencies, maybe they lived through COVID and they had tough experiences. Maybe they didn't. I have to imagine that taught you a lot about running a company too as a CEO. So when you look back on that period, what are like some like the key moments or key lessons that you think you learned? Or maybe even like mistakes you made that you won't make again in the future because you had that experience.
Yeah, tons. I love the team we built at RevenueZen. At the same time, I would have just chosen a different model from the start as far as hiring goes, were I to do it again. I frankly would have just offshored much more of the kind of like non-client facing work. I would have split the delivery team into, if you are non-client facing, you are highly skilled, but not US based. And if you are client facing, you definitely are stateside and you have to know what you're doing too. But I would have bifurcated that early on versus having the stateside team, who's much more expensive, do everything. And
Yeah.
making that change later on is tricky. That's one change I would have made.
So just to frame perspective, so how full service was revenues and what were your core offerings?
They morphed over time, but for the final few years, it was pretty much B2B SEO. So creating content, building backlinks, optimizing websites, even building websites sometimes. We didn't touch ads. We did dabble in LinkedIn a good amount, but the problem with that was I was, by the end, the only account manager, quote unquote, for LinkedIn. So we had to scrap it because it couldn't stand without me too much. So I would say pretty much a B2B SEO agency.
Yeah, B2B SEO. So like your learnings, do you think that they're specific to B2B SEO or B2B marketing in general? Like some of the things that you learned that you do differently today?
No, not at all. But they are specific to any agency model that's in that middle of the curve. So you have on the low end, you have this like tons of bodies, efficiency based to get it all done. And then on the very top end, you have these like highly experimental, more consulting firms. And in the middle, you have a combination of strategy, consulting, and delivery. And we were right in the middle. And anyone in the middle should pick advice. If you're on the low end, you kind of have to win a low cost location, hire really junior level folks. Your services are low priced. You're more like training college grads. On the total upper end, you're only hiring expensive consultants. You're billing at super high hourly rates. And that's a whole different challenge. But a lot of agencies are in that middle zone where combination of strategy and delivery, you're doing a bit of both. I love that zone. A lot of agencies are in that zone. I think their hiring model, just their gross margin model, could be way improved. And it's hard to unwind once you choose one of those models.
Do you think if AI was farther along when you were running RevenueZen, do you think that you would answer the question differently about what you would offshore, what you would keep in the US?
AI still can't do that much in SEO. Not very good anyways. It's actually one of the worst.
Even like workflows, admin type stuff. Like all of it, the whole thing, the whole operational side.
Kind of, but even then, like, Paula in the Philippines, who is our ops manager at RevenueZen, is her armed with AI is better, modestly better than her alone. But I would not replace Paula armed with AI with US person armed with AI to be the ops person, for example. So that's a choice where I wouldn't answer differently, but we might have had an easier time with some of the back office and admin things. I still wouldn't change the location based of the back office hiring plan though.
What about like on the financial side? Like it sounds you had a financial background, right? So you or at least you had an interest in it and you knew enough that probably made you a pretty good operator. But anything that you didn't understand about your business model at the beginning that you came to understand better later? Like, for example, margins, like what to include in your gross profit, what not to include in it. I find oftentimes that's not something that most agency operators really understand is their margin profile on their business and what costs should be captured there. You have a perspective on that?
Oh, yeah. Fortunately, we had a pretty good background in that. And so we were pretty diligent about like departmentalizing payroll into the cost of goods sold versus overhead and sales and marketing. So I had departmentalized kind of chart of accounts, which people might say, oh, that's just too much detail. But what it tells you is how can you scale and what are your profits going to be and change as you scale. I've seen some agency owners' books from just helping advise them, from being in clubs with them and so forth. And they have personal income taxes for the owners being paid from the company. And those are going into an overhead account. And it's just, they have all payroll going under operations. And the only thing in their cost of goods sold is like the pass-through ad costs. Okay, that's one way of looking at it, but you just don't know how you're going to scale versus if you have overhead and marketing will scale at different rates than cost of goods sold. Your gross margin, in theory, will expand a little bit, but not too much as you scale, whereas overhead should be much more flat. Like you don't usually need a new office. You don't need another HR person very quickly at all. So just the pace of scaling that, what it will do if you put everything in, for example, overhead and not of cost of goods sold, is it'll tell you something like, our margins are bad and we can't scale them easily, whereas really you just need to expand. You need to go to market, you need to expand your business, and your margins will improve because your gross is fine in these cases. But yeah, without that insight from your financials, you're kind of flying blind and you don't know that you can do that.
Yeah. So to say it another way, there's two options. One is if you do know your margins and your margins are consistent and healthy, but you're still not making money, it basically probably means you don't have enough scale. Like you probably are carrying a lot of OpEx. You may need it. You may need it for leadership. You may need it for administrative things. You may need it for growth. And it's working. You just got to get bigger.
Yep.
The other scenario is you're not making money on the projects that you are quoting, meaning you actually have to fundamentally fix your business in the way that you probably price and deliver work, and start by just like understanding, are you making money on each one of your client engagements? And I find that is the one area where most agency owners struggle the most, is they just don't have access to that level of information. But thankfully you're accounting adjacent, finance adjacent, given your background.
Yeah.
So going from starting business to selling business, right? What was the selling part like for you?
Equally messy.
Yeah.
I think because I hadn't had enough experience with it to know what to look for and to know red flags. So it's the same trap to fall into, whether you're fueled by greed on one end, but ignoring red flags on the other. That's a big trap in both pricing and packaging the wrong clients, with hiring the wrong people, with choosing the wrong acquirer. That's the trap I'd say I fell into. And we were approached by a company called Ava Acquisitions. And they had this like really slick pitch. Most of the people on their team were awesome. And we just spent months with them. And I ignored red flags about some members of their team, particularly like the money guy on their team was just like, no. But I put that aside. And by the end of it, my gut was proven right. I knew it was just falling apart. I knew 8% of their team was going to try to screw us, and the rest of them were just like doing their best and really cool people to work with, but not the decision makers. By 6 months into that process, it was too late. So yeah, we just chose the wrong acquirer. And by that point, my focus had been taken more toward that. And that really double whammied us. So by the end of that, I was pretty more hardened, I'd say, as far as what I would look for, and to not think that an LOI or, an on the table offer or an offer in general meant you were going to get that. Numbers on a paper versus a wire in your bank account, there's just an ocean between those things. Like doing financial due diligence on your acquirer is incredibly important. People just don't do that. They just think we are the one being interviewed. You need to interview your acquirer too about these things, like to make sure, can you get paid?
Yes.
Can you collect? What is the security of that? Do you have security in your contract? Do you have a collateral agreement? What is your collateral? If they go under, what happens? Can you take back your company? Just so many questions to think about. So there's this finance and then there's risk management, and you can't do risk management without finance.
The character of the people acquiring you matters a lot, because it will tell you a lot about what it's going to be like to transact with them.
Right.
And I think it's also super, like, if you've never done it before, as somebody who's never done it before either, going through it, you learn it on the fly. And I think sometimes you feel like you should know more than you should know. So I think at first it's like hard to ask for help or ask for clarification, but man, like you got to do your homework and you have to understand all of it. And my experience was very good with our capital partner,
Okay.
but I found myself at times just needing to make sure like I understood it all. Like it just takes a long time. You can't breeze through it. And there's a lot of different components to it. So the market for agencies out, like marketing agencies right now, what is the landscape for the marketing agency operator? Like the bootstrapped operator like you, who's going to build a great business. They got a good lifestyle. They're making money. But what's the path to liquidity? Is there a market for it out there for folks right now?
Rates are still high, so deals are getting structured more. And just overall multiples are a bit compressed. But since RevenueZen being acquired, I have helped to lead more acquisitions into RevenueZen still in. A couple of days ago, I was talking with a company doing
Yep.
about $1.5 million of EBITDA, projecting $2 million next year, and just crafting out a path to acquiring them into our holding company.
Yeah. What's the structure like for RevenueZen? Are you part of a bigger holdco or are you like platform?
Yeah, our acquirer, I would argue, is currently a bit too decentralized. They would agree. And then we're in the process of centralizing, kind of like taking Stardust and making planets out of it. RevenueZen
Yep.
is a planet or a platform. And they just acquired another good sized company, platform worthy. And then we're looking for more that are bigger. But RevenueZen is 88% owned by Onfolio. Onfolio owns a lot of stuff. RevenueZen is on the bigger side of their portfolio. And the size of acquisitions is also growing. Yeah,
What's your role with RevenueZen now?
capitalist,
Capitalist.
contract
Love
capitalist. I
that.
don't have a job.
So
I get healthcare. I don't get a salary. I just look for deals and help do deals. And that's really fun for me. I wanted to do more on the buy side because having been on the sell side, I was like, ooh, I'd love to be the buyer. I learned all their tricks. So having learned all the stuff I need to know, now I can be an ethical yet very shrewd buyer of agencies. And that's been extraordinarily helpful. I think more agencies should do acquisitions and tuck-ins before they have a capital partner, because I think they think you need a bunch of cash to do any acquisition. And you definitely don't. Sometimes you need no cash, sometimes you need a little bit of cash. And sometimes it's wise to get some cash through debt to do an acquisition that really makes sense. As a buyer, you have all the control, some risk, but having all the control makes the world of difference. Now I'm doing more acquisitions than I am trying to sell things. Which,
okay. So like near iBanker turned sales turned founder operator,
yeah.
basically now turned capital allocator.
Yeah.
So it's come full circle. You're almost back to where you started in iBanking, except you're now on the M&A side, like
Yeah.
actually buying companies.
And I've done one into RevenueZen. I've sourced a couple more that are like serious pipeline. And then in my SaaS company that I'm owning and running now, we just completed another acquisition of a small competitor 2 months ago. It's not just for the agency, but yeah, we did an agency acquisition in March. We put no cash down and did no financing. It was 100% rev share. And we did a tiny amount of cash down, but it was like the first month of rev share, which basically meant it was guaranteed talent acquisition, guaranteed net income. There was no way we could lose, and we had all the control. More agencies should do that as a buyer, I think.
So what if there's like a target for somebody who owns an agency? They're thinking maybe some liquidity or maybe getting bigger, maybe selling would be nice. Like targets for them. Is it $1 million in EBITDA? Is it a certain revenue size? What's a benchmark they could just aim for to be in a position where they can actually have the optionality for it?
It all depends. Where do you live? How much money do you need? How much longer do you want to work in the agency business? What are your options? Is your option, for example, to illustrate options, I talked to an agency owner who has a solid but still low margin business. It's a sprawling empire of SaaS and services. And he's just, he wrote in an email, my minimum price is 3.3 million because that's the amount I need to retire day one after tax. That's the cash I need. And I was just like, that's an 8x multiple of EBITDA in cash up front. And in polite terms, I said, I wish you the best of luck and I hope you get that. That is not feasible. I love your business, not at that price. But I backed up for a second. I was like, I know you want to retire. Why does it need to be all cash up front? Like you're just that burnt out? The lesson there is don't let yourself get so burnt out that you have to ask for an unreasonable amount to retire. That's
Yeah, I think
ouch.
what you said is super important too. You're more likely, I think, to get the upside that you want if you're willing to work for it. Like
Yeah.
you may have some liquidity on the front end, but you're going to have to earn out the rest, especially if it's at the upper end of the valuation
Yeah.
norms. And yeah, if you're like just building and you don't really know what you're building for, you just get so burnt out that I need to be done. And this is my number. Your number has to be tied to reality.
Yeah.
Your number has to be reverse engineered into like, how are you going to work with your acquirer to make sure that they can get the return that they need on it? 'Cause it's got to make sense for everybody.
Mhm.
I think if you get to the point where you're so fried that it's all or nothing, I think you're probably going to end up like pretty disappointed, unfortunately.
Yeah. I mean, that's a
Yeah.
sad situation because then you don't have options. You're not employable if you are unable to even work like physically to show up to work through an earnout, then you have to, it's rare to find a high or even good valuation at that point. You're basically looking at like small, kind of almost not fire sale, but almost fire sale valuations. If you're like, I need to be gone day one, like you're going to get worse
I'm
terms.
going to walk away tomorrow.
Yeah.
And the reason for that, guys, is because there's too much risk in whoever's buying your company. Like if you're a small agency, your relationships are probably very much tied into the client base and your revenue. And if you go, the risk is your revenue goes. So all that gets priced in. Just walking into it, knowing what to expect, and you're going to probably just go. You're going to go back to work for a bit and
Yeah.
make sure the transition goes well, and make sure that it's a mutually beneficial arrangement at the end of the day.
You at least have to stay around. And that's what I did with RevenueZen is I wasn't operational, but I was finding leads, doing intros, generating demand, finding deals. Like I wasn't turning the crank. I wasn't writing content. I wasn't in client delivery, but I was there doing stuff. If they had a question, I was preempting questions. I was doing the things I wanted to do, but I told them this up front. I wasn't hiding that. I was like, here is the capacity in which I want to stick around. Does that work for you? And they were like, yeah, totally. It's great. Now there's going to be no surprises when I do that. So whatever capacity you want to be in, you have to be upfront about that.
Yeah, so if you're bootstrapping an agency now, so like key lessons from Alex. So you got to understand your margins in your business. What's Alex, your perspective, like gross margin targets for an agency? What's great look like? What's good look like? What's like yellow red flags?
The main lesson is you got to model it out much higher than you're going to get. So if you model out 60%, which is phenomenal, and you get 50 to 55, I think you're in really, really solid shape. If you model out 50, 55 and you get 40 to 45 consistently, you're doing good. If you model 40% and you muddle around at 30 to 35, you're going to have a real tough time. I learned that lesson myself. Your model of how much it's going to take always gets blown to shreds. Oh, we're going to spend this much on client communication. No way, add 50%. Oh, we're going to have this much on contractors. Okay, what if one of your contractors leaves with a prepayment, doesn't do the work, and then you get a garnishment on their wages notice and they've left the country? That's not baked into your margins. Like all the unknown unknowns need to have a significant line item in your margin calculations. Just put an unknown unknowns pad in there because stuff
It's
is
like
going
contingency costs.
Exactly. The reason I didn't do that initially because I was like, we have to hold ourselves to efficiency because that's the right thing for our clients. I don't want to just overbill. And that was just naive. It was just naive to do that because I didn't count any contingencies. So model out 55 to 60%. If you hit 45, 55, great. Like you're doing awesome.
Yeah. This is true for a lot of businesses, but like 50, 30, 20, 50% gross margin, 30% reinvestment in OpEx to run and grow the business, and a 20% EBITDA margin. I think you're always going to be doing well.
Yep. That's it.
And if you can optimize your margins above that, I think that you start getting into the great category.
Yes.
Especially if it's consistent.
Right. Exactly. That's a really good way to look at it. I mean, the classic CPA model was 30, 30, 30, but I mean, that kind of gets whittled away. I think it's closer to 20 now, but if you're between 20 and 30, yeah, wonderful. I think if you're modeling out 25, 30 net operating margin and you're hitting 20, 25 with short spurts, 10 to 20 that you live through, then great. Yeah, I love to see an agency with that. We even bought an agency that was loss making. We just knew which assets we were going to buy, which contracts we were going to cancel. And I had a totally different idea of their margins because I did them myself. And I said, well, we're going to cancel this and this. And my backed into it margin was like 25%. I was like, all right, great. That's what I'm going to bid.
Yep.
But I'm only going to bid when we collect the cash. Yeah. If you're thinking about selling, that's the math the acquirer is doing. But if you're just going to grow your company, then still you got to shoot for 20, 25% net operating margin. just to freaking live and
Gotta make money.
make money, grow your wealth before you be like this guy I mentioned and die of stress or just burn out. Because if you're burnt out and you don't have enough wealth, what are you going to do? Like it's a
Yeah,
real,
it's hard to take a break
yeah,
when if you don't have some wealth.
totally.
So know your margins. If you're thinking about like what's my end game, just I think Alex had some awesome perspective on just what it was like to sell, some of the things to look out for, and ultimately just know what you want to get out of it, like what's your role going to be on the other side, and make sure it's something that you're like excited about and are walking into knowingly. And I think that there's an opportunity for a lot of small to medium-sized agencies out there to have a nice liquidity event. Okay, so let's pivot to like the other side of go to market in SEO, because a lot of our clients at Hiline are small businesses. So like I owned small business for a long time. We've gotten bigger. You owned a small business.
Mhm.
I think most small businesses historically have almost invested like nothing into marketing. Oftentimes it's the operator, the founder, CEO, whatever. They're very relationship based, very referral heavy. Referrals are spiky, which means you just never really know what to expect. So it's hard to forward plan. Why do you think small businesses don't think about marketing as a necessary cost historically?
A number of buckets. One is limiting beliefs. It's not going to work. All marketing is a sham. All the social media noise is just noise. It's not going to translate to business if I do that. I'm afraid to put myself out there. A whole just host of limiting beliefs that are half true. Much marketing doesn't work, but some does. That's the kind of answer to it. Then which one does? If that's the skill of marketing. You just have to get good enough at it to know the difference. There's we don't need it. We've just had such an influx of business for so long and we just don't need it, which is great. And then you want to scale beyond a certain level and you realize your business has grown from a fixed monthly amount of gross new recurring revenue sales but your cancellation rate is percentage based. If you do the math, eventually your business is going to stop growing because your gross sales rate as a percent of your revenue is going to equal your cancellation rate as a percent of your revenue. Then you stumble because you think I'm flattened out and I have no marketing muscle. Now you have to spend valuable time or some money, or probably both, building that muscle because you didn't build it before. Going back to both of those points is you have to build the marketing muscle, and there's just no shortcut for at least knowing the lay of the land. I know enough about tax to know don't hire that consultant. Check with this CPA first. That strategy is something you should ask your accountant about. I'm not going to file a return for somebody, but I know enough to know my way around. You have to know your way around marketing. You have to know it doesn't seem like paid ads are the right fit at this time. It seems like we have more room to grow organically. Like things like that. You may not be turning the dials, but it's incumbent upon you, the business owner, to know what things to explore, which experts to talk to, how to check referrals, how to know if it's working, things like that. Even if you're not the technician, you usually shouldn't be the technician doing the actual work, but you should know how to lead the function. And if you don't want to, you have to have a partner who does, or your business is going to be slower, which is one of those two options.
I think you need to know your industry. If you're in construction, maybe you don't have to market in the same way because your customer is hyper local and there's only 10 options. So you have to stand out amongst 10, but not against 1,000. If your business operates in the cloud, post COVID, right? Like Zoom and all of the technology that has now enabled you to do business anywhere with anybody. I think that your business is like highly susceptible to disruption from companies who are not in your local geographic presence. And I think all of those companies are the ones that the message is really for. Like the old saying, only the paranoid survive.
Yeah.
Did Andy Grove say that? No, it
I
wasn't
know,
Andy
but I've
Grove.
heard that.
So if you're not thinking that anybody could come in and eat your lunch at any time because your business could really be done by anybody anywhere, isn't that what you should be thinking about marketing? Because your referral base is likely going to start to dry up. I think it's like inevitably going to start to dry up over time as people get used to sourcing like the absolute best company or service they can find from anywhere, absent of where they're from.
Right. Yeah. You need a compelling narrative of why you, and that can't just be down the street. That might carry you so far, but it no longer carries it as far as it used to. And that advantage it's not like a binary, like that's dead. It's like a whittling away over time. The advantage gets whittled away over time. If it is local, you have to have a more compelling story than just that. Like, why is this particular service in this way priced at this price point better to have local? Maybe you are local, but then your team is partly offshore. And that's how you make it work, is you're not trying to price super, super high and you are competitive with a remote firm. Or you're not so far priced off that the difference is super salient. So there just has to be a more compelling narrative around why you. I used to. And a lot of the stuff, like you said, is you have to take advantage of technologies that enable you to work better and faster because other people are going to adopt them. They're going to be able to do more efficient work. And eventually your local narrative, if it's just I'm down the street, that's going to chip away. So,
Yeah, it's like we're the best. We have the best quality. We have the best people. Everybody says the same thing, generally speaking, in industries. What actually makes you better? What actual problem are you solving? And being able to articulate that like very clearly and prove it.
An educated customer has made marketing much harder. You used to be able to say, that's what you pay me to answer. And now what you used to say, that's what you pay me to answer, that's your new content marketing. To questions, general thought leadership is your content marketing. Specific tailored advice is different, but the insights, your methodology, your way of doing things, that should be on your website. That should be on infographic. That should be plastered everywhere. You can't sell that now. You have to sell tailored and specific application. Most people can't sell general advice. In, like you said, a cloud age, someone else is going to share that, what you thought was your secret sauce and really isn't. Generalized secret sauce is no longer secret. It's just
nobody has more knowledge than ChatGPT. Like, knowledge has been completely commoditized away.
Implementation and things like ChatGPT can't sign a tax return. Somebody needs to put their reputation on it. Now that is a different value. Somebody needs that second set of eyes on their things. They use ChatGPT and they just have to have somebody they need to ask if that's correct. And that's potentially a consultant. Now, maybe your business is less selling knowledge and more being a guide. So there's a lot of shifts that a much more educated, knowledgeable consumer with knowledge at their fingertips is going to push you to adapt your business model in. But it cannot be like it was 10 years ago, where your advantage will be whittled away.
So for the average small business, right? Let's say they got 25 employees, say they have a model that you could operate some type of B2B services company. If they do zero marketing today, how do they get started? What do you think would actually work? Forget about the nuance of industry, but what are the things that you would start with?
The simplest answer is percent of everything. In any marketing channel, effort, or strategy, the earliest part of the investment is usually going to give you most of the return. It's like a flipped S-curve where lots of gains to start, then it slows down. And then when you get to the top of your game, it really speeds up again. Think of an S-curve shifted 90 degrees. So what does that mean in practice? Doing one LinkedIn post a week is really good, if it's good. But you're not going to see that much more efficiency from doing LinkedIn until you get to really top of your game on LinkedIn. So do a little bit of everything. Same thing with SEO. Do a little bit of SEO to get the cheap, easy stuff, the stuff that's, you could totally rank for this really easily. And then you have a slowdown where, ranking for more things, you're on page 2, page 3, slows down. By the time you're ranking on page 1 for the hard things, then it just speeds up again. So you go from the initial quick wins to a little bit of disillusionment, slow down, to mastery. And if you hit the first part of the curve, the upswing, on 2 or 3 different channels at once, I hate the phrase low-hanging fruit, it's such business jargon, but that's basically what it is. When you hit toward the end of the easy part, stop. Pick just one channel to commit to go through that disillusionment curve and find mastery in it. And once you do, then you can keep it going, keep executing, defend your advantage, and then pick a new channel. I personally like, for a lot of B2B services sold to white collar, I like LinkedIn first. It's really easy, galvanizes more referrals. 1 or 2 posts a week that are well written, keeps you top of mind. You don't have to do much more than that. Then do easy SEO. Then do maybe easy outbound. Maybe those 3. That's a very common initial 3.
So I think you'd be surprised by how many people don't actually know what SEO is.
Oh, okay.
And how do you generate an SEO?
Yeah, that's a good question.
Give me the elementary explanation for it.
Yeah. So a lot of people hear, SEO and they think of Google Ads. So when people say SEO as distinct from SEM, they usually mean not paying Google for ads, but simply creating the web presence both on your own website with its content, as well as other sites that link to you and talk about you, such that you don't have to pay and you still show up highly in rankings on either Google or, yes, ChatGPT. Regardless of the search engine being used or whether it's even AI, you just want to be coming up without having to pay for it when anyone searches for whatever it is, whether it's a specific type of tax strategy, whether it's B2B SEO agency services, which is something we rank for at RevenueZen, whatever it is. You just want to be showing up without having to pay for it. So that's SEO. When people say SEM or ads, they mean paying for it. You could do both, but ideally you want to be starting with the part where you own it without having to pay for every click. SEO, you don't pay per click. You just are there. You get clicks because that's just Google or ChatGPT or whatever saying this is the source, this is the result.
Yeah. So you have to be findable.
Findable.
Right? Like they'll have to be able to find you. And I tell you, I can give you my experience. This is pre-RevenueZen. We tried to do paid ads to get eyeballs on our website, but we did it before we did the other stuff, which was get the website dialed in, get SEO dialed in, make sure that like our presence was already solid and good. And like when we actually paid to redirect people to our website, it would convert and it would do well. Yeah. Didn't do that. Spent a lot of money trying to force it. So it isn't a guarantee. There was a strategy behind it. So you do need to make sure you have somebody who knows what they're doing. Mm-hmm. And I think also the key point you made, Alex, is you have to consider this as an ongoing investment. You can't spend a little bit of money. It's going to work. You're going to get excited, think you can pull back. Like you actually are going to have to continue to probably invest more to get up the other side of the S curve because it's going to get more expensive to get a bigger ROI. And I think when you've got it and you have a marketing function that works, you know, if you put $1 in the machine, you know how much you can expect to get back, which is the gold standard, because then you can decide, what do I want to do next year? Do I want to invest X dollars in marketing? I can reasonably expect that I'll probably grow this much, and you can build your business plan around that. But if you don't know how to actually plan for growth, everything else is a guess.
It's the nice thing about when you get to the final part of the S curve, the kind of mastery side, is you'll have been making so much money from what you're doing that you'll have the confidence, the institutional knowledge, the ability to forecast, such that it'll be easy to have made that decision. So yeah, build that muscle as early as you can, but recognize that middle part. You won't come out of the gate swinging with knowing that your return on advertising is going to be 3.4 or whatever. Like that has to be built over time, painstakingly through. It's actually more like once you get your ad dialed in, this one ad group is going to be at a ROAS of 0.9. The other one's going to be 4.2. And they're like, oh, we have to have two groups and at least, and then one is low and one is high because I'm doing cold layer, I'm doing retargeting layer, and that's how it's working. Okay, cool. And most people don't even think about starting out. They just think I run ads, I get money. And then they develop the nuanced understanding. So just choose which muscle group you're going to work on when it comes to marketing. And there's some art in the choosing. The choice of consultant is good too, because I mean, you can picking the wrong one, you can get in the trap of we tried that and it didn't work, but you just did it badly, which is super common. And every marketing agency has had tons of clients that came to them having previously been burnt. Yeah, it's a whole can of worms, but SEO, great place to start. I'm a huge fan of it as a channel just because it's the marketing equivalent of not passive income, but close to it. LinkedIn is what's active. Really good.
Dude, you're like crushing. Like, how many followers do you have on LinkedIn now? You're like rocket ship.
No, I'm not.
I
have 25,000. That's not much in the grand scheme of things. There are people who go from.
But it's fast. Like it went up fast for you. It seems no slow grind.
Some people get to 0 to 100,000 in a year or two.
Okay, that's like a whole different. That's like a whole different caliber rocket ship.
But yeah, it is. But I guess in my world, the thing is, I have the similar revenue per follower as not. My revenue per follower has gone down. Revenue per post and per year from doing LinkedIn has been pretty consistent. The follower count has been largely not irrelevant on LinkedIn, but it is not the yardstick. When I had 3,000 followers, we had just the same amount of lead flow from LinkedIn as I do now.
Interesting.
Yeah.
Okay. It is interesting. I like your content, man. We're trying to grow ours. So it's important though, because that's how you can amplify your voice. The more followers you gain, and the followers you gain that actually care about what you're saying, the easier it's going to be, I think, for you to crack the marketing code.
It is.
At least on that channel. So it takes effort. So I guess to wrap it up, man, like the podcast is all about being fiscally awesome. Yeah. So I think my opinion, being fiscally awesome requires an investment in marketing. Like if you are a small business and you employ a bunch of people and you have the responsibility of making sure that their families are taken care of and you have a sustainable business, you have to invest the money into growing your business and understanding how to grow your business. Because if you don't, I can almost guarantee you're going to end up in a situation where you have a bad year or things dry up and you have no lever to pull to get it back on track.
Yeah. The best defense against that is abundance of pipeline. It's having invested before you really needed to. Having options is amazing. Even if you don't need to grow, generate more pipeline.
Cool, man. Awesome perspective, Alex. I appreciate you carving out some time for us, man. And congrats on RevenueZen and everything you got going on. And we'll pay attention. We'll follow along and see how you guys are doing. But someday, hopefully we'll have you back on and we'll catch up in another 12 months. We'll see where you're at.
Love that. Let's do it.
All right, man. Thanks, Alex.